Oh boy, here we go again. Back to work tonight. Non-farm payrolls coming in hot tomorrow morning. Easily the biggest news of the month coming in bright and early tomorrow morning. On top of that, we have two beautiful trading ranges on the charts in front of us. Put those two clues together. Non-farm payrolls tomorrow. Two beautiful ranges in front of us right now. I'll tell you, it smells like breakout pullbacks. Breakout pullbacks are probably where the easy big money is made. Finish the week tomorrow morning. I'll talk about why I said that tonight in the video. More importantly, we'll give you guys a roadmap, an easy, simple roadmap to follow to make some money on those breakout pullbacks to finish up the week in the green tomorrow morning. Now, before we jump in into my favorite trades for non-farm Friday, before we talk about all the details tonight, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button for me. Give me a shout out down in the comments section below. Thank you so much for tuning in, supporting our channel. Enough of the intro though, Joe. Friday is not going to trade itself. Let's go make some more money on non-farm Friday. Now, charts are all ready in front of us. You can see here, Nasdaq, triple Qs are ready. Oh, the E-mini and the SPY is ready. I have four very important clues on these charts right now that are telling us where the winning trades are waiting for us tomorrow morning. One of those four clues is right here on these 60-minute charts. The 60-minute time frames tell us we are bullish overall right now. I like to use the higher time frame, these hourly time frames, to give us that overall directional bias. That tells us where the odds are stacked in our favor. But you know what this doesn't give us? The 60-minute charts do not give us entry tactics. They don't give us levels of support and resistance. I have three more clues. We'll put all these pieces together and lead us to the money tomorrow morning. One more of those clues is on our schedule for tomorrow. Tomorrow is a Friday morning, not your average Friday. The first Friday of the month means we got some fireworks coming out tomorrow at 8:30 Eastern time. There will be some drama around that number tomorrow. We expect to see a lot of fireworks around 8:30 tomorrow morning, so get there early. Most important thing for tomorrow, though, is tomorrow is a Friday, and Fridays are not like any other day of the week. I have what I call the Friday mindset. What does that mean? Well, think about this. We are not as disciplined on a Friday, right? I know it's not just me, but a lot of us break our rules on Fridays as the day gets older. Also, too, the markets get illiquid. The volume dries up on Friday afternoon. So my goal on a Friday morning is to get in early, take profit early, remove risk early. And I'll tell you right now, go back and look at the last couple of Fridays. 3 out of 5 Fridays, they love to run. So get in early when the getting's good, when I'm at my best and the markets are liquid. Take profit early, get rid of that risk early. Don't close those trades. Leave a little piece to run. Because again, you'll see Fridays love to run. So again, expect some fireworks tomorrow, 8:30 Eastern time. Don't go gambling around the non-farm payroll number. Get those charts updated after the news comes out by 9:15, 9:30. We'll know our day type. We'll know exactly where, hopefully, some breakout pullbacks are going to be for tomorrow. Now, speaking of those breakout pullbacks, that's where I think the money is made for tomorrow. Let's get back to our charts now. I talked about earlier 4 total clues. 1 was the 60-minute time frame. 2 was the big news, big fireworks coming out tomorrow morning. Let's now cover 2 more important clues right now on the tick charts here. Let's drill down to our tick charts here right now. On the tick charts here, by the way, this is a 7,000 tick chart, upper left-hand corner, all the time frames. And if you're watching for the first time right now, this is the 21 EMA. It's pretty much the only indicator you need to come out and trade with us every morning in our trade room. And by the way, I like to use tick charts because tick charts make the entry timing easier, because tick charts make pattern recognition easier. So tick charts, not time charts, make entries better. 2 very important clues. 1 clue. I know it's a while ago. Remember back on that ISM number earlier on in the week, this was one of those trading ranges we saw earlier in the week. Now, I know a lot of you guys are in my free video classes right now. If you're going to my free video class right now, you know that anytime we see a range breakout, we love to get breakout pullbacks. It's not an if, it's a when. It's almost a guarantee. It's just a matter of time before we come back and take out that breakout pullback zone. That is one very, very important clue. You want to keep that area on your radar. There's one on the Nasdaq as well. We'll grab that in a second. That's one very big clue. That's our third clue for tomorrow. And the second range, of course, the final clue is this bullish range right here. These types of bullish markets into a trading range like this, ranges love to rotate. So as we go lower, the market wants to rotate off that low, roughly about the pendulum swing going higher. And this is where one of those breakout pullbacks is on my radar for tomorrow. So I want to talk about that breakout pullback because there's plenty of ways to make money on that breakout pullback. But before we talk about that though, oftentimes with this big news tomorrow, we know there's going to be some head fakes. There'll be some shenanigans tomorrow morning. We have to think about a fake out breakout. Do not be surprised of a fake out breakout that runs back down and takes out that breakout pullback zone. And then we get that monster breakout pullback from earlier on in the week. This one is the one that's the most potential to be a huge payday for us tomorrow. However, this one is the most complicated because this one will have a lot of momentum going against us. We're going to talk about that a bit later on in the video. If we're lucky, we'll get that big one for tomorrow. That's a little more challenging though. Let's cover the easy one first, right? Let's cover the easy one first, but later on in the video tonight, I will talk about that fake out breakout going lower because again, this could be one of the biggest winners of the month of June. Let's talk first though about the first breakout pullback. There are two really, really easy ways to make money on a breakout pullback in this situation. Again, it's a bullish range, and we know that ranges love to rotate off the low and then up around that high. So as we're going higher, there's one very simple pattern we always look for during the breakout going higher. It's always going to be what's called a bear trap pattern. Now, bear traps are very, very simple patterns. As we go higher, look for price to separate off the 21 EMA, very important, make a higher high in price, and you want this, what's called a trap, underneath that low. In the free video course, these are called trap patterns. This, of course, is a bear trap pattern. The bear trap pattern will usually create what's called a measured move. The amount of the breakout leg into the measured move, that becomes where our target will go. I don't know exactly how big that first leg is right now, but that's the sequence, that's the formula to get in on the bear trap entry. And again, use that first leg, second leg, that will give you the target. Think about a measured move. Let me teach in the free video course. Now, once we get that measured move here, we don't want to keep buying. We take our profit and we start looking for now that breakout pullback. When I think of a breakout pullback, I always think of a two-legged pullback. Now, what is a two-legged pullback? A two-legged pullback is a two-legged move underneath the moving average, goes a bit more than a measured move, okay? Think about a measured move, a 100% extension, go a bit more than a measured move. Now remember, I don't have a crystal ball. I can't pick that bottom. For all I know, this will run all the way back down again, and don't you worry, I will cover the short on that if we do get that fake out breakup. We'll cover that here in a second, so don't go anywhere. Now, if we pull back to that moving average, I would love to use this combination. It's called a failure pattern, which is basically the bears trying once, bears trying twice. Why twice? Because I want to trap those bears in, use their stop losses, their stops, right, to fuel that move going higher. This will then become one big leg and two big legs going higher. Think about measured moves, right? Measured moves. It's a Friday too, so leave that runner. Now, one more thing here. After that two-try failure, I want to look for what's called a bear trap pattern. Same pattern over here on the way going higher. So one of the breakout pullbacks for tomorrow is move up, grab that bear trap going up. And again, it will look more like this, right? It'll run up, it'll separate off the moving average. That's the key. Separate off the moving average, higher high in price. That creates your trap entry. A lot of examples of those inside the free video course. Again, think about one leg, two leg, that's your target, right? Going higher there, take your profit off at the high, then you want to get underneath that moving average, get that one leg, two leg. Remember, don't pick the bottom. Remember, a bit more than a measured move. Don't pick that bottom. Wait for it to pull back to that 21 EMA. Remember, this is a horrible spot to be selling. We're right at the top of that trading range, right? Grab those bears, let them try once, let them try twice. Once those bears try twice, now we got you, right? Now we got you. Trap those bears in, squeeze those stops, right? Think about this. If you're caught short right there in a breakout pullback and you get stopped out, the only way to get out of that short trade is to buy your way out, right? Failure pattern squeezes those bears higher. And again, think about this now. That big leg combined to that big leg, that creates our symmetrical target going higher now. Now, as we're making our run to that area, now it becomes that bear trap pattern, because as you guys learn in the free video course, bear traps or trap patterns overall are always my favorite entry to make sure we're buying as low as we can on the way up, right? I'm not worried about that in the deep pullback. Failure patterns on deep pullbacks, but trap patterns as we go higher. So that is one of the breakout pullbacks I'm looking for tomorrow. Now, let's slow down for a second because we've covered a lot so far in this video. And I know most of you guys watching right now, you know these patterns. You know what we love traps. You know we trade breakout pullbacks. But if you're watching for the first time right now, this might be a brand new language for you. I look at things a bit differently here on this YouTube video. I definitely will agree on that. So if you're here for the first time, if you want to learn more about these, I teach all these entry patterns. I have probably over 100 now examples of failures and traps, everything covered in my free video course. I'll put a link up top here for you, upper right-hand corner. Hit that link that pops up there and take that free trading course, because the strategy I teach in that short video series will teach you a remarkably simple trick we use in our morning trade room, our members trade room, so you always know where the best winning trades are going to be every day. Most importantly, I want to help you start making money on your own. I'll teach you 4 my favorite entry patterns. You'll learn traps, you'll learn failures, and a whole lot more. It's all covered in that free video course. Guys, the markets are so good right now. We get so much great volatility. If you're not making consistent money every day, if you're still missing the best entries, if you're struggling to qualify for a funded account at Top Step or Apex, hit the link that popped up there. Take that free trading course. It's perfect for someone trying to make the jump into full-time trading with the easy roadmap to follow, so you always know where the winning trades are going to be each day. And also to keep in mind too, I'm going to put all the important links tonight, the description of the YouTube video. My free class links will be down there. We trade together every day in our trade. I'll put trade room membership information, the description of the video too. And also too, I post a lot of updates on Twitter or X throughout the day. If you're on X or Twitter, give me a follow. All details, description of that YouTube video. But definitely start first though with the free video class. Learn how to make money with traps and failures and breakout pullbacks. Now, in a moment, we'll talk about that fake out breakout going lower, because that might be the most lucrative trade we get the entire week so far. But first though, let me cover one more potential variation of that breakout pullback that does come after times we get a news event. Again, I would like to go up and buy that breakout pullback off that trading range, but tomorrow's non-farm payrolls, we may end up popping up and grinding and running higher. It wouldn't be a huge surprise if the number comes out, say, lower than expected tomorrow. That may have the market kind of grind going higher. If it pops up and grinds going higher, these are very easy patterns to make money with. Simply draw a trend line off the highs, anchor it now off that big low, right? That creates a new channel, and then look left. What you want to do is you want to find one of these prior swings and try to get in around one of the prior swings at the low of that channel. Okay, we call these pop and grind channels. Pop and grind channels. I'll tell you right now, this may become your favorite chart pattern once you see how reliable these patterns are. The key is it pops up, it separates off that moving average and begins to grind running higher. The key is don't chase after it, because eventually it will pull back, and that pullback is that is a gorgeous opportunity for us to make some money tomorrow morning. Now, this could be a trap pattern like I'm showing you here. A lot of times it gets underneath the moving average like this 21 EMA. The bears will come in, try to short this thing going lower. They get trapped short. That becomes a failure pattern. Failure patterns turn into pullback patterns. Failure patterns turn into bear trap patterns. And of course, we look for that run going higher from there. One really cool thing about pop and grinds is the size of the pop leg, okay, is the measuring leg. Pin that down at those lows, and that becomes your measuring leg. Remember, tomorrow's a Friday. You better leave that runner if we get in off a bear trap or a failure, pullback combination, really any of the entry patterns you guys are learning in the free video course. My whole thing is I want the first test of that channel, right? First test is always the best test off the low of that channel. All right, so now we know more about how to trade the breakout and the pullback. We know how to trade, right? That pop up and that grind going higher. We know those. Now let's get our hands dirty. Let's roll the sleeves up and talk about if we get some sort of fake out breakout off that high. Let's go to the Nasdaq now. S&P looks good. Remember, keep in mind, S&P and Nasdaq are usually pretty darn similar. The game plan is pretty similar as well. Over on the Nasdaq right now, one clue is on these 60-minute time frames, we know we're bullish overall. That gives us the overall directional bias. You probably don't need me to tell you that right now. We know we're bullish overall, and here we are now on the Nasdaq on the tick charts. You'll notice right away a 4,000 tick chart, a bit less volume on the Nasdaq, which is why it's a lower tick chart value. Do not forget about that 18,862 level. That's that I know it seems like forever ago, earlier this week, right? That ISM number. Remember, it's not an if, it's a when, right? It is not an if. This price will come back to the area at some point. It may be tomorrow, it may not be till next week, but do not forget that 18,862 and a quarter. Again, it's not an if, it's a when. Go back and look at previous breakouts and ranges, and you'll see they always find a way to come back. The one big difference on the S&P and the Nasdaq, though, is on the S&P, we had a bull range, and we were underneath that range rotating higher. On the Nasdaq, we're just tucked right in to what I'm sure some folks will call a bull flag right now. So we have pretty much the same idea here on the Nasdaq, right? We get that strong run up, looking for that breakout pullback, right, off the news tomorrow morning. If we get that pop up and that grind, same idea we mentioned there on the S&P as well. Now, let's talk about the fake out breakout, because again, that could be some big part of this for tomorrow. Now, one thing about fake out breakouts, there are two ways to short a fake out breakout. One thing I need to remind you though is whenever I'm going against the overall directional move, right? We're bullish overall. I personally always go a half size position, right? You might go a quarter size position. If you're brand new to this and you're not making money consistently going with the trend, this might be a 0 size position. So please make sure you size your positions accordingly. Going with the trend, load the boat. Against the trend, half size, quarter size, or again, if you're not making consistent money yet going with the trend, it might be better to wait and trade only with the trend, and so you get back on track here. Now, two ways to trade a fake out breakout. One is called a crown reversal. As we go higher, run into resistance, this is not a good place to be a buyer. Professionals are not buying up there. These are rookie buyers who are buying there. One of the ways to short the top on this is to trap those rookies in, let them try once, let them try twice. Why twice? Because once they try twice, now I know their stops are right below that low, and I can use their stops to fuel that move going lower. The one thing about a bull trap off the high or a crown reversal, we call it, is I want to get that move right above that high. I need to be in the green on this trade as it goes lower, all right? So a crown reversal pattern to short off that top. That's one of the two ways to pick or trade that fake out breakout. And again, I'll talk about in a moment here how to buy the sucker as it goes lower. That's the best part about the game plan for tomorrow. The second way to trade a fake out breakout is the easier way. It's a V top. Oftentimes we'll run up, and for whatever reason, we're so high up overall, right? Everybody takes their profit. Almost a buy up high gets whacked right back down again. These V tops are kind of the easiest one if you are mentally prepared for it, because what happens is it'll run up, it'll get whacked back down and start grinding down off of that high. Okay. The hard part about this, when it grinds down like that, it's going to make you want to chase it. That voice in your head is going to say, come on, man, you're missing it. You have to resist the temptation to chase after it going lower. What to do is draw a trend line off that low, bring that trend line up around the high. And as always, look left, find some prior swings. And again, want that first test off the high of that channel. This could be a bull trap above prior swing. A lot of times these will get just above the moving average. Buyers come in, they try to get long, they fail for a failure pattern, failure pullback combination. Now, one very important thing about this V top on the fake out breakout, we know we have that trading range. Remember how ranges work. The amount above the range gets projected now back below the range. This becomes the target. I want to be in and taking profit on this before I reach this. I want these entries well before I get down to that pendulum swing. I don't want to get that email tomorrow saying, Joe, I sold this thing and you sold way down here. No, that's not the goal. The goal is go up, trap the buyers in, and you better be short. You better be cashing a paycheck by the time you're getting that pendulum swing. This is not where we sell short, okay? This is where rookies sell short. Understand how ranges work. I want to sell on that rotation back off the top of that trading range. Now, once we get down here, see, now the real fun starts. Now we've got some rookie bears chasing it. Now we get all the buyers who got short up, all the sellers who got short up there. Now they become buyers down here. Let's talk about now as we find our way, if we're lucky, and find our way down to those areas here. There's a very good chance tomorrow morning we're going to get a big move off of that non-farm payroll number. It may go up and slam back down. It may go straight down, okay? So I mentioned this because if we get a strong run down, I need to anticipate two things. One, the sellers are going to try to get down to that 862 level. Again, it's not an if, it's a when. It will happen at some point. So if we go lower, the first in my mind is I gotta be prepared for a move back to that low. The second thing is, if I see a strong run down, whenever we see a strong move against the trend like this, it's going to want to pull back and retest before it makes that run back up again. Okay, so two things. If it runs lower, this range down will act like a magnet to drag that market lower. So as it goes lower, I have to be careful getting in buying right here. Okay, because again, it will try to drag it lower on me. Also, too, whenever we see a strong shot against the overall trend, the most common thing is it pulls back and it retests that low before it snaps back up again. Okay, now, there are ways to make money on both of these. Let's talk about this. As it runs lower, again, I'm anticipating that retest of that low, right? That's the danger in buying that first leg lower. So what we'll do is, this is where a crown reversal or a bear trap comes in. I'm not going to pick the bottom. Okay, stop going all or nothing, picking tops and bottoms. The easy way to make money is, the more consistent way to make money is trap the bears in. Let them try once, let them try twice. Now watch closely here. This is a higher high in price and a move right below a low. I need a bear trap entry on that move going lower. Why? Because again, as it goes higher, who's up here? Bears are going to come in. They're going to hold the underbelly there, and they're trying to roll this thing back down to retest the low. Now, hopefully we get lucky. Hopefully this thing squeezes. Hopefully it squeezes and rips higher, and I can finish that up there with a bear trap entry on the way back up to retest the high, right? This would be kind of the dream scenario as we go lower, right? Strong run down, trap the bears in. Again, I do not want to be buying this as it goes higher, okay? That is asking to get your face ripped off as it retests that low. But again, my goal is a bear trap entry or a crown reversal pattern, as we call it often in the free video courses. And then again, buy as low as you can right there and buy that bear trap. You'll notice both of these patterns, the same exact patterns, they're both bear trap patterns. One is a reversal. We call those crown reversals. And the other one is a true traditional bear trap pattern. Again, if you're watching for the first time right now, I realize this might be a brand new language. So grab that link up top in the free video course, learn the tools, the techniques, terminology. This will make a lot more sense in incoming videos, right? Okay, so on the first leg down, right, that's the trick. Bear trap, okay? Now, oftentimes, the easiest money, the biggest money is we run lower, we get that bear trap coming in, right? Oftentimes, that is a pretty easy winner going higher. We get our 1-to-1 target. We move our stop up to the point of entry. But again, it holds the underbelly of that range. Again, think about breakout pullback, right? Breakout pullbacks are very common, right? They're very common. It holds the underbelly. And now, anybody who sells short to hold the underbelly right there, they run back down. They're taking their profit at that low. Think of it this way. If you sold short up here, you're a buyer now down here. So sellers become buyers as it retests that low. Now, do it again, but now I can be a lot more aggressive. Once they retest that low, that's mission accomplished now for the bears. We're right in that breakout pullback zone, the perfect spot to be a buyer. What's the challenge though? The challenge is momentum. Momentum is not our friend right now. Momentum is very bearish right now. We're not gonna pick the bottom. Now use that same failure. 1, 2, trap those bears in. Now, I could get it. I could use a bear trap right here. A bear trap will be a blessing right there. I would not argue a bear trap. I don't need a bear trap though on the retest. I do on the first one. I do need a bear trap on the retest. Oh, sorry, on the first one. On the retest, all I need now is a seller failure. Trap those bears in, squeeze those stops. Remember, it's always going to be that failure into that bear trap combination as we make our way back up into that range above and try to make our way back up to retest that high. These double bottoms, again, these failure into trap combinations after a retest are oftentimes the biggest, most lucrative trades. So keep it in mind if we make our way running lower. And as I mentioned earlier, sometimes there's so many buyers down here. I want to run lower, trap the bears in and back up again. But there have to be so many buyers who would love to buy into it. We may only just run lower and then whoop, right back up again. If they V-bottom off that low, remember, do not chase after it. Mark up that pop and grind top, right? Pop up and grind. See, that's the same pattern we talked about earlier, right? Same pattern. Mark that pop and grind. Look left and don't miss that first test off the low of that channel, right? And again, this could be a failure pattern, could be a trap pattern. We've talked about that quite a bit already, right? So bear trap pattern, failure pattern, pullback pattern. Again, remember, don't forget, right? In these scenarios, the market wants to go back up, right, into that range, take out that high, and leave that runner, right? Leave that runner on a Friday. Man, I'm getting goosebumps. I'm getting excited just thinking about this stuff right now. Excited for Non-Farm Friday. Now, I think we covered a lot in this video, but that is the game plan for tomorrow. Like I said earlier, tomorrow morning, 8 o'clock Eastern time, come trade this stuff with us. The easiest way to start making money in these markets is to learn and trade along every day, 8 o'clock Eastern time in our trade room. I'll put all the important links tonight in the description of the video. I would definitely recommend start first with the free video course. Learn the fundamentals, learn the setups, learn the terminology, start making money on your own. And don't forget, if you need trouble getting access, any errors getting into the video course here, don't be afraid to call the office, use live chat. We're always here, so call the office, send me an email, use live chat if you guys have trouble getting access to the free video courses. But bottom line, I hope you learned a bunch here tonight. Hope you use this knowledge to make a killing tomorrow morning. And hopefully I'll see you sometime soon trading with me in the morning room at 8 o'clock Eastern time. In the meantime, be well out there. Be nice to each other out there, will ya? And you better be here next time. Adios, amigos. Bye for now.